So what owners need to figure out is sort of how do I take this income business or salary that I've created for myself and turn it into a business? Or if I'm not going to turn it into a business, how do I invest it in the markets or real estate? So at least I'm growing my net worth outside of the salary or income business. So, when I want to take a vacation, I feel like I can take a vacation.
Welcome to Gratitude Geek, the relationship marketing podcast for micropreneurs building genuine, lasting relationships with clients, colleagues, and community. I'm your host, Kandas Rodarte. If you love eavesdropping on conversations between grateful entrepreneurs who are making this world a better place, be sure to subscribe, share, and hey, leave a review. Today, I'm joined by a fee-only financial advisor, Ryan Derousseau. Ryan specializes in working with therapists, private and group practitioners, and the self-employed, enabling them to thrive financially so they can focus on clients. Lots to chat about today, y'all. But first, this episode of Gratitude Geek is brought to you by the Super Patch Company. Want more sleep, less stress, less pain? There's a patch for that. Learn more at grateful.superpatch.com. So welcome, Ryan.
Yeah, thanks for having me. I'm excited to be here.
So tell us your story. How'd you get to where you are today?
Yeah, it's a long, winding route, as I'm sure a lot of your listeners have experienced as well. But I started out as a journalist, and I just happened, as I was starting out as a journalist, to be funneled into sort of investment and personal finance writing. And so for many years, I was working for publications like Fortune and Money and places like that. And in fact, one of my first jobs was covering financial planners or covering the people that I am now today. And so one of my favorite questions to ask people is sort of like, what type of financial education did they get growing up? And almost always it's like zero to none. And my education was I learned how to write a check and trade a stock when I was in eighth grade. Neither of those two things do I do on a regular basis today. And so because of my sort of where I started in journalism, I happened to learn all this stuff about personal finance and investing and sort of what's best for people and what's like kind of like the industry's like tactics to put you into things that maybe aren't best for you. And so I decided after COVID that I wanted to step away from like self-employment as a writer, and I wanted to become self-employed as a CFP and help people one-on-one with some of these issues. And so that's how I followed that route and why I focus on the group that I focus on as well.
So let's talk about financial education for kids. I remember in fifth grade that we learned a little bit about economics. And then in 11th through 12th grade, I took a very basic business class. And I think we had to take economics junior, senior year too. So that's about it. That's about all we learned in school. How can we improve on that?
I mean, there's a lot of ways. One, having actual classes where we're talking about personal finances. That comes with a lot of loaded opportunities, though, right? Because like, who's the one developing the courses? Is it like the large brokerage groups? Is it large banks? Or is it like people who have, just the general interest of like students to learn sort of the basic aspects of finances? So you have to be careful there, but like creating curriculum around that would be so key. Another thing, like I, I talk to people at various stages of their life and in various like very different like economic situations. To me, both greater economic situation and lower economic situation. And one thing that doesn't change among that is parents don't really talk about money. And so not only are we not getting educated in the course, but we're also not having conversations with kids on a regular basis about money, other than maybe how little there is. And that can create some like anxieties and issues down the line that we want to prevent. But it's not so much about the X's and O's and understanding it as a tool, as opposed to sort of how I think a lot of people view it as sort of like a way of life or, the ultimate goal or something like that.
Yeah, it's really interesting because parents, they don't talk about money. They don't teach their kids about money.
Mhm.
They hold it close. Well, I mean, this is my personal experience. They hold it close and sometimes they resent it.
Oh yeah. Yeah.
There's a lot of resentment towards money. My grandfather was a self-made millionaire through the stock market.
Oh really?
And you
Wow.
would think that if you have a grandfather who knows how to play the market, how to invest, that he would teach that to people, you know?
Right. Yeah.
All he ever told me was invest in stocks that pay dividends. That's the only thing he ever told me. And so I didn't learn how to do the stock. I didn't know how to play that game.
Yeah.
I didn't. And a lot of it was, I mean, I'm of a certain age. I'm of a certain age. When I was born, women didn't invest. Women didn't even have checking accounts when I was born.
Yeah, that's true.
So,
Yeah.
and I'm not that old. I'm only 54, y'all. Women did not have checking accounts when I was born. So,
Yeah, I think it
so
I think it was like what 70s to 80s when they were allowed to finally
allowed
open allowed
allowed to have
without
their
their
own
like
checking account, allowed to purchase their
husband
own
or father
home. Yeah.
present. Yeah.
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 Or buy their own vehicle. And even today, when we go vehicle shopping, I mean, I don't mean to take this down this road, but even today, when we go vehicle shopping, they always want to talk to my husband. And it's like he always points at me and says, she's the one who makes the decision, right? You should be selling to her, not to me. you
Yeah.
know?
Well, good on your husband there
Yeah.
also. Yeah,
Yeah.
like
So, I mean, I know this isn't your zone. I know that you're not here to talk about that, but what advice do you have for parents to to start that conversation? Because unless they learn it from mom and dad, they may never do it.
yeah. I'll respond to that question, but also respond to the question that you just kind of mentioned about like women and getting started with investing and managing finance as well. The from the kids front, it's creating like continual conversations and not hiding from the stuff that you're like stressed about or worried about from a money standpoint, but actually having those open conversations, not where like it's yelling between you and your partner about how shortage of money is, but actually like talking through sort of what you're thinking and why you're thinking it, that sort of thing. Some of this comes with a caveat. You need to make sure that you're coming at it with the right framework as well, because again, and you, I mean, like a listener, hasn't necessarily had the education to become an expert and teach your kids about the finances. And so if you don't have the expertise, then it's good for you to get the expertise as well. But then having sort of those regular conversations and then incorporating things like you think of with like an allowance and having a certain amount of that allowance go to maybe long-term stuff, like maybe like my kid's really into Legos. So I try as much as I can to convince him to put like $1 of his allowance to long-term purposes, like a big Lego set or something like that. And you can use the short-term stuff for like the minifigures or whatever. And it's not always, it doesn't always work, right? They're kids, but at least it's like getting into their head um about that. And then my wife and I are always having conversations about where we want to go and what we want to do with our finances in the future. And so we're not necessarily hiding him or my younger daughter who doesn't understand any of it yet from those conversations, because eventually we want him asking questions and like trying to understand sort of why we're coming at it from that framework and whatnot. So that's how I would typically gauge it, just sort of normalize it.
Yeah. Well, food magically appears on the table.
Exactly.
Their
Yeah.
bed is there. They don't have to work for it. They don't have to wonder how it's going to get paid for. They just assume it's going to be there. And at some point, they have to understand that it's not magic. Mommy and daddy work hard for that.
Yeah, yeah. And I mean, like my son gets an allowance and he keeps wanting more allowance, right? And it's not like I'm just going to say, okay, you can have more money just because you're a little older now. And I was like, okay, so what are you going to do to actually like earn the more money? And so kind of building that in. Again, he's kind of a spendthrift right now. Everything he grabs, he wants to like immediately spend. And I'm not trying to necessarily like squash that and say, oh, this is the way it's always going to be for him or anything like that. But, just slowly sort of work it into regular conversation and
Well, well, the
question
nice thing
thoughts. Yeah.
because Legos are so expensive, so Legos is a good thing for him to be obsessed about.
Yeah.
Because Legos are so expensive, that's washing the dishes an awful lot of times to get his Harry Potter
Yes.
set,
Yeah.
because Legos are not an inexpensive hobby.
No, he tries to wait till like, the holidays or birthdays for like the big stuff. But he's starting to realize those are few and far between. And he has other wants in that situation. And yeah, he doesn't have a lot of needs right now because we cover most of his needs. Eventually that'll change. But yeah, he's going to have to do much more. He's getting to the age where he can do more. Eventually, like I'm self-employed, so when he's a little older, I'll eventually like do hire him within my business so I can pay him through the business for actual stuff that he's doing. One, it's a nice little tax perk for me, but it also teaches him like valuable lessons of like earning money. And, if you're going to get paid a certain wage, you're going to have to like do a certain amount of work to at least achieve that until, you're a boss as well one day.
Okay, so I know you're not a CPA or an attorney, but do you know off the top of your head what those maximums are right now and at what age you can start? Because a lot of listeners might not realize they can hire their kids. So at what
Oh,
age can
sure.
you hire them?
You can hire them whenever you want. I mean, at whatever age, they just have to do legitimate work for the pay, right? So you can't pay them $50,000 for coloring on work time, like like it's not going to be allowed. The IRS is going to say, hey, what's going on? But like, there's a pretty famous court case that touches on this where a father who was like a lawyer or something like that, he paid his son $100,000 a year. He was 15 or so, and he paid him for like computer engineering and computer software work. And the case reached the appellate courts and all that sort of thing, and the judge finally ruled is like, listen, based off of everything that I've seen here, this kid could go out and get $100,000 job somewhere as a computer software designer. So there's no reason that his father can't pay him the same amount for the same amount of work. And so it just has to be legitimate. But otherwise, it's not. There's no age limit. And then in terms of limits, like kitties, I don't know, they vary year by year. And so you just have to look at the tax tables. But I think the kitty tax is like 14,000. So anything above 14,000, they get paid or they get charged at their tax rate, not your tax rate, which is obviously a lot lower since they make a lot less money.
So 14,000 is the sweet spot number.
Yeah, because that's the deduction amount, so the kid can get the deduction, and then anything above that's like really nice.
And
Still.
I mean, my kid did filing and stuff like that. I mean, there are legitimate things that a 12-year-old
Yeah,
can do. Filing is an
absolutely.
easy one, right? And filing does take time, right?
Yeah.
So there are legitimate things that kids can, data entry. I mean, there are a lot of things that kids to do. When my daughter was a baby, her job was to be cute because she came to work with me for the first year or so. Her job was to be cute when the customers came in the door, right? Could I pay her to be an influencer?
That
Not
would be
then.
tough. That would be a tough one. You'd have to justify that to the IRS if they came around. But most things can. Like I have a writer friend who, her daughter's in high school, and when she gets hired for work, she'll have her daughter do the first draft because she's a decent writer, and she's teaching her daughter how to be a writer, something that she wants to do down the line, like totally legitimate, and she's in high school. So it's really sort of whatever your business is, you can find stuff for the kids.
A little interesting tidbit. My husband and I owned a business before my daughter was born. And so the only thing she ever knew growing up was mommy and daddy were self-employed, right? And
Mm.
so she went to college, went on to grad school, and she doesn't ever want to be self-employed.
Yeah.
But
Lessons learned, I guess.
lesson learned. But I think it gets passed from generation to generation because My mother's mother owned her own business, and my father's grandmothers, both of them owned their own businesses.
Hmm.
So, but in the late 1800s, if a woman owned a business, it was because her husband died and she had to, right? I
Sure.
mean, there
Yeah.
was no, you had no choice. So one of them owned a grocery store, and the other one owned a bar. I
Yeah.
mean, that was the a saloon, right? So that was, I mean, you're for when your husband dies, you are forced to do something about it. You can't. So, you know what? That is something that you, as a financial advisor, can help with.
Hmm.
So let's talk about what you do. First of all, what
Sure.
does fee only mean?
Yeah, so fee only is how I get paid. So what that means is I only get paid by my clients. I don't get paid by, a brokerage or insurance company to put you into certain insurances or certain mutual funds or anything like that. And the reason like this sort of design developed is solely so people could get like actual third-party advice. There's a term out there called fiduciary, which all CFPs have to hold to, which is we have to put your benefit, your financial benefit above ours. But like if you're working with a fiduciary that's not fee only, they're not necessarily matching that business model to that term, whereas the business model is really much more matched to the term under the fee only sort of design.
Your client is the person who's investing the money, and
Yeah,
they
yeah,
are paying you. Whereas at a
exactly.
brokerage house, it's the investment funds that are paying them.
The investment funds, or they may be getting commissions based on the funds that they're being put in. Like, for instance, I can be an investment manager for someone where I'm taking 1% of the portfolio. That still qualifies as fee only. And there's reasons that certain people would want to do that. One, maybe they're aging and there's a lot of age risk involved with that, or they simply don't want the management of the investment on their plate. So there's a lot of reasons for that. But and you can get that at a brokerage. What separates someone like me from someone at a brokerage is I'm not then, getting that cut that you're paying me. And then also if I put you into certain funds, getting paid by those funds to put you into those funds. Because there's a lot of hidden costs when you're working with brokerages like that. And you have to be careful, especially if they're talking about like putting you in what's called active funds where there's active fund managers involved, or they're putting in you things like annuities. It's not that those things aren't good, not that those things aren't bad, but you just need to know why they're putting you in there, and there must be like a really valid reason to do so.
I wish I had it in front of me right now, but you probably know it. You probably know
Mhm.
this information off the top of your head, but I saw a graph that was done over the course of the entire time that the stock market has existed. So since 1896 or whenever, somewhere in the 1890s, right?
Yeah.
And it was a graph of the 4-year presidential cycle by quarter. And
Hmm.
so it was 12 quarters because 16 quarters because there's 4 years and 4 quarters. And it showed over the course of the last 125, 20, 30 years exactly how the stock market does during the presidential cycle. And
Yeah.
the stock market always drops significantly in the third quarter of the final year. you know,
Just in
right?
preparation, probably.
And then it bounces back significantly in like the second or third quarter of the first year,
Yeah.
right? Have you seen this graph?
I know what you're talking about. I think I've wrote an article about it actually when I was a writer back in the day. You know, here's the thing: when you are self-employed, you have inherent risk in your lifestyle, your income, all that sort of thing. And you are not an investor typically when you're self-employed. You are instead whatever you do for self-employment. And so one thing we want to do on the investing side is reduce your overall risk. And one of the biggest things you can do when you're investing is try to time the market, which is kind of what that chart speaks to. It's sort of like, oh wow, if you could just like sell here and then buy here, look how many gains. But when we're investing, we're actually evaluating when you need this money, how much risk are you willing to take on? And so let's match that risk to your timeline and make sure that you have this money for when you need it. That way you can focus on what you care about, which is your business. and that's where a lot of the income's coming in from, and so we're kind of taking that off that risk profile essentially. And so the reason I'm not so well versed on it is because of that sort of mindset that I take into investing. Is I don't really worry about the ups and downs of the market, because I know over the long term that if you're like diversified and economies continue to grow, then we will get you invested in a way that will grow over time, so that money will be there when you need it.
So the Dow just hit 40,000 a couple of days ago.
Mhm.
Uh, as a journalist, what would you have done? What would your take have been as a journalist? And then
Oh,
what is your take now that you're an advisor?
yeah, now you're speaking to one of the reasons I wanted to be an advisor and not a journalist anymore. Because often in terms of writing, I would have to write like either specific pieces about individual stocks, or what you're just described, like what does 40,000 mean? And you know what? And so as a journalist, it would be like, what does this mean? Well, it means like this thing's going on, this thing's going on, and that's why it's kind of risen a little bit now. But then at the end, remind people like it's just another number in the long line of stock growth that is also impacted by things like inflation. The same reason that a dollar is worth less tomorrow than it is today is the same reason that like 40,000 is, looks a lot more impressive. Whereas like right now, whereas 50,000 is going to eventually be hit at some point. And so I've taken that mindset into the the financial planning world, where it's cool, it's awesome, it's great. I want my clients' income, like financial income, to grow, net worth to grow. So that's all well and good, but it's just another mark that just happens to be the next mark. And at some point down the line, we'll hit 50,000 most likely. And so I just want you to be invested so you can take advantage of the 50,000 more
Yeah.
so than anything else.
Well, so but when it's at 40, I mean, if I don't, I mean, I didn't follow it that well, but I do know that it was like in the 20s 4 years
Yeah.
ago or 8 years ago, and now it's in the 40s, so it's doubled in a short amount of time. So it's going to correct again. I mean, it has to correct. It can't just be, or I mean, but I know it will keep growing. So,
Yeah. So
as an
yeah.
but as an investor, I mean, it just seems so. Oh, the market's doing really well. Now would be a great time to invest, but really, that's not necessarily the best time to invest.
Yeah. So Fidelity did a study. I'll just cite the study and then kind of get to the response. Um, in 2008, when the market had the Great Recession was going on and the market kind of collapsed overnight, what they did was evaluate sort of the investors that pulled their money out, and then the investors that put their money back in versus the investors that just held steady, right? And so they then looked at who did better by 2011, right? And so those who pulled out in 2008 and then never entered back in to enjoy the correction or like the rebound, only saw their total like savings grow by like 2% or something like that. Those who pulled out at some point and then bought back in at some point, I think it was like they saw about a 20% return by 2011. And then those who just held steady and didn't do anything saw a 50% return by 2011. And then those who kept buying, and so that means, what are they doing? They have their portfolio that they want, they know that they want to keep to, and now suddenly the market's corrected or fallen, and you're buying the same stuff. It's just cheaper. So you're buying more of it. And so by 2011, those folks saw their returns reach 60%, I believe it was. And so they had the best response. And it's because they were able to buy more of what they they were going to buy anyways, just at a discount. And so they had more to invest after the fact. And so that's how that essentially what you're saying is that in action, in the sense that like, yeah, the market will correct. We have no idea when it will eventually correct. It could be tomorrow, it could be a year from now, it could be 2 years from now. But let's say it is 2 years from now. That means if you pulled out now, you'd be potentially missing 2 years of growth that you could then also continue to manage through a correction. And so it's just not worthwhile since you don't fully know. If you could time the market, sure, great, do it.
Well,
But no one's going to be able to do that.
That graph I have of the 4 year, the 16 quarters of a presidential year time it pretty well.
It does, but again, you're sort of looking at the overall market as a whole. You're not looking at the individual person of when they pulled out and when they went back in. So if you pulled out the beginning of the third quarter, are you going to see you're going to see a difference depending on if you pulled out in the middle of the third quarter or whatever. And it's also, these are averages. And so what could be, the famous line in investing is, past returns don't predict future results or something like that. Past results don't predict future returns. And so, that's what you could fall into in that scenario.
Well, yeah, and companies go out of business all the time.
Well, certainly that too. Yeah.
So. The companies that you never thought would ever go out of business because they just don't react to what's going on in the world, right? Like
sometimes it's that, sometimes they're just too confident, sometimes the business model is just no longer viable.
Yeah. One of my favorite success stories of a company that could have gone out of business is the Yellow Pages. Mm-hmm. They a few years ago they said, oh, well, Yellow Pages don't exist anymore, so we need to adapt. And so now they've transformed into this company called Thrive. And Thrive does full service digital marketing. So the Yellow Pages is now a digital marketing company. I mean, that's
better than the Polaroid story, right? Or what's the camera
Kodak
company?
I think it was Kodak
yes.
that didn't do anything, said digital is, and I think Kodak actually developed digital cameras, but they, if I remember correctly, they came up with the technology, but they didn't run with it.
Yeah. Yeah, one of my first experiences as a journalist was in when it was 2008, and I went to a Kodak event, and they were trying to, the iPhone had come out by now, and they were trying to showcase that, look, we're this modern company, and look at what we can do. And it's just I just remember the vibe being man, this is kind of sad. This is kind of a really sad situation.
Imagine if Kodak had developed cell phones, if they had partnered with a cell phone company, oh my, I know. My brain just exploded. I wanted to ask you about stock splits. I get it. It's not very often I get to talk to a financial advisor. What is a stock split? What is the purpose of a stock split? And is it an advantage to the investor or just the company?
It's more of a marketing tool, honestly, than anything for the company. Because if you have a stock and suddenly your stock is $700 a share, it's hard to market that to new investors. And so a stock split is a way to reduce the entry level. They just basically are saying there's more stock, we're creating more stock is available. So your shares that you own are actually worth less now, the individual share, but because you're a current investor, for every individual share you get, let's say 2 shares. And so now you own double the amount of shares, but they're worth the same value overall. And so it's a way to encourage new investors. The one thing it can do is deplete the value of a share. And it's the whole purpose of it, really. But in terms of how it changes your investment style, it's not going to change that much. It's just an easier way to market to new investors.
I love that you said it's a marketing tactic.
I mean, essentially, there's no other reason to do it that I'm aware of.
That's brilliant. What are your thoughts on cryptocurrency?
So I actually wrote a book on how to invest in cryptocurrency years ago. And when I wrote it, I was given the opportunity, they approached me to write it, and I was like, well, I'll write it as long as I can basically write the X and O's to personal finance. And if you have all this in place, then here's how to invest in cryptocurrency. And so they were like good with that, because at the time I would be getting reports that people were putting their house up for, they would take a second mortgage on their house in order to invest, and that sort of thing. And again, it gets back to sort of like that market timing, or you know, taking increased risk in your investment life when you're sort of self-employed. Is this the risk that you really want to take? Because you're taking a lot of risk when doing so. So when I work with clients, I want them to be broadly diversified in about 90% of their portfolio. And so like just, vanilla stuff. But if they are someone who has like a real high tolerance for risk and really wants to take some of those like big bets, then take 10% of that portfolio. And if you want to invest in Bitcoin or whatever, Ethereum or some other sort of crypto, then go for it. But you just have to be willing to understand that if you lose it all, you're protected in other ways. So it just has to be stuff that you're willing to just lose overnight. Because I mean, the reality is like cryptocurrency, while the numbers look great, I mean, the amount it's used as an actual currency has not changed all that much. And Bitcoin drives the price. So all these other things that are sort of, we're saying that they have this healthy future and whatnot, it's still not like baked into the price, because Bitcoin's driving everything, and it's individual investors kind of driving that. And so I'd say it's still very, very risky, but if it's something that you want to like put a few dollars into and you're willing to lose them, then it can be a good way to kind of diversify into a high risk asset.
So, what are your thoughts on regulating cryptocurrency and perhaps even standardizing it so that it's something that can be used?
Yeah, I don't have a strong thought on it, other than it's always struck me as something that if it was truly a currency that became like so widely used, that eventually governments would just say, okay, we're just going to turn our dollar into a cryptocurrency, and now that's going to be what's used online and digital purposes. So, because like while a large part of the cryptocurrency investment world loves the fact that it's decentralized and there's no like federal government backing it, most of the nation does not either care or want that. And so eventually I would think that if it got to that point, that governments would do exactly what you were talking about, standardizing it.
Fewer and fewer people will use cash. I
Well, they use
mean,
digital cards though. I mean, they're
yeah,
using credit cards, which is
but
based off of cash.
yeah, but exactly.
Yeah.
But we're used to swiping, tapping, and
Yeah. See, but the problem with like Bitcoin, for example, is part of the reason you can't use it as currency is because you're taxed every time you use it. When you buy it, it's just like buying any other sort of investment. And so if you were to turn around and use it, 2 days later, and it's spiked by 7% or something like that, you actually have to pay tax because you've now sold it, even though you've used it as a purchasing tool. So that makes it like a very complicated sort of tool to use on a regular basis for spending. But it is a currency, so eventually it needs to be spent.
yeah, but it's not really a currency if you're taxed on it. I mean,
Right.
that it's an investment and a risky one.
A risky one. Yeah, exactly. And yeah, and so these are all the conundrums that are circling around the cryptocurrency world. And I'm agnostic. I have clients who are heavily invested in it, despite my warnings and whatnot. But it keeps going up, so it's like hard for me to tell them not to do it completely because they're seeing like nice value of it. But when I'm sort of planning for them, that's how I plan. I imagine that thing is not existent, non-existent. And then, are you okay if that's the case? And so far, like most of my clients are totally fine with working under that. If we get to a point where we have to start doing something with that tool, then we'll figure it out then. But yeah, that's kind of my perspective now, is as I don't know what's going to happen, so let's just protect ourselves.
How hard is it to sell your crypto? I mean, can you just dump it or do you have to find a buyer for it? How does that work? I've
It's
never invested in crypto. I don't know how it works.
Yeah, so I mean, there's like brokerages. Coinbase is an example of one. So anything that you sell, like a stock or whatever, there has to be a buyer, right? So if you're on a regular brokerage, and let's just say you have a penny stock that you decided to invest in, and now you're trying to sell that penny stock, and no one wants it, well, it's going to sit there, and you're never going to sell it. The same has to be like with the crypto. Someone has to buy it. Right now, there's plenty of people willing to buy it. And so that's why the price rises, because there's so much demand for it at this point. But if that demand were ever to falter, or if something like came around, like standardization or something like that, yeah, then maybe there's not that buyer. And so that's how people can lose a lot overnight. And that's also why you see huge fluctuations in the price.
I always find it fascinating what the direction that these conversations on this podcast go.
I will say I
Because
wasn't expecting to talk about this stuff.
because
So
you came with the intention of sharing how a solopreneur entrepreneur can be a better investor in their business. So
Mhm.
talk about that.
Yeah. So one thing, so because I was a service-based owner, and I'm still a service-based owner, and I work with really service-based owners, one thing that they struggle with is getting out of that hour mindset. So an hour worked is an hour paid, that sort of thing. And so what you'll find is that people sort of move to self-employment, and they're really excited. And so that first year, they're really trying to build up, get clients, and they're excited about that. And then maybe the second year it starts to click, and they start to see some good income from it. By the third year, they might get like really burnt out by this, because it just feels like what I call hamster wheel syndrome, where it's just never ending and you have to keep up just to keep up type of thing. And so what like owners need to figure out is sort of, how do I take this income business or salary that I've created for myself and turn it into a business? Or if I'm not going to turn it into a business, how do I invest it in the markets or real estate, so at least I'm growing my net worth outside of the salary or income business? So, when I want to take a vacation, I feel like I can take a vacation, that sort of thing. Because what I run into a lot, particularly in the private practice space, is there's a high rate of burnout among therapists. It's about like 50 to 60% at any given time are feeling the symptoms of burnout. And it's because of that sort of hourly mindset when it comes to the business.
But think about it.
Well,
Therapists
exactly.
are listening to
Exactly.
people complain all day long. That's
Exactly.
hard.
And it speaks to that need even more, because they need the vacations, they need those breaks. They're naturally empathetic people. It's why they chose the profession that they chose, and they are folks who their friends would naturally go to them for help and advice and things of that nature anyways. And so, a lot of them are like, I want to do this until like I'm 85, like I never want to stop doing this, because this is what I do anyways. And so they're able to take that emotional toll on at some level, like better than maybe, like definitely me, probably you as well, based on that question. And but but it's the day in day out like grind that becomes like too much. And then if you add on the fact that, like, if you're mentally spent because you haven't had like a vacation or anything like that, and then, oh, by the way, my entire day is listening to really tough clients talk about really tough situations, and that just happens to be my day today, that's gonna really be hard to like go to work and be energized. And so how do we like make sure that you have ways to build in and like energy boosts essentially for yourself, is one thing that I work with them a lot on.
So, in a very general, broad, overbrush, brushstroke way, what is the number one thing that a small business owner can do to do that, to ensure that they have that
Yeah,
cushion?
and like I say, there's like three ways to invest in America. You either invest in the markets, business or businesses, or real estate. And so one thing that we have to figure out is, of that income that you're creating, how and what's the best way for you to invest based on you, your personality, the income, all that sort of thing. Retirement savings is always an easy go-to, right? Because you get tax breaks, there's tax benefits of putting that within the business. And it's a great way to, like, as I was saying earlier, create security within an unsecure work life that you've chosen for yourself. And so that's always sort of a number one, you know, low bar situation. We need to sort of start working towards that. But then it's up to the personality. Like, what do you want to do? Do you want like a business where you have employees? Do you want a business or that's only solo? If you only want a solo business, then how else are you investing that money to make sure that you're not just getting on that treadmill? And maybe that's investing in other businesses. Maybe that's investing in real estate. Maybe that's just doubling down on the investing in the markets. But you have to do one of those things, or else you've just created salary for yourself. Especially if you're unwilling to like build your entity into a larger business.
Yeah. Excellent. Do you want to add it to any of that? Is there anything else
One
you want to
thing,
add to?
yeah, one thing I would say is, because I talk about this a lot in the private practice world is, oftentimes when we're self-employed, we don't think about the long term. We don't think about eventually selling this thing. And it's because like whatever we're building is built off of us, our personality, who we are. But if you start to think long term and really building a brand and really building something that can live beyond you, there are so many opportunities to create a business that could be sold one day. And there's so much like demographic shifts going on in America, the world, whatever, where it would make the potential for a sell even even more viable. And so like looking towards that, like don't like ignore that as a possibility. I always talk to my clients that it means you can't like have you know Ryan Derousseau, LCWS.com as sort of your website, but you have to like build a brand around it that can live beyond you. But if you start to do that, then you could really have something there that could really be valuable when you're ready to step away. And by the way, you're spending all this time to build this entity. It's a shame that you just think that as soon as you step away, it's just going to disappear because you've put so much blood, sweat, tears into it.
I want to push back on that just a little bit.
Sure.
My husband and I owned a custom furniture business for a couple decades. It was very, very successful. Our book of business included movie stars and Fortune 500 executives. We were extremely successful.
That's amazing.
Sold very high-end furniture. We made great money. And when we were ready to retire, it wasn't a marketable thing, even though we didn't brand it within ourselves. The name wasn't related to our name, our family name. It was a very marketable thing. Somebody could have purchased it from us and we could have taught them what to do, and they could have started making six figures right off the bat within the first year, right? But furniture makers don't want to make somebody else's furniture. They want to make their own furniture. Right. So that
may be specific to your like specific.
But there are other businesses where that is true. Yeah. So when it's probably going to be really super simple to sell a plumbing business because a plumber, can totally step into that. But you've got to really think about your niche when you're creating your business. We had an extremely successful business.
I 100% agree with what you just said. It is definitely sector by sector. There's no like broad brush to that. I absolutely 100% agree. And then one thing that you can think about, and I don't want to speak to your specific situation, but just generally speaking, like if you're in an industry that may hesitate towards that, one thing you can think about is hiring your mentee or your future owner few years in advance, not just like 6 months in advance, a few years in advance, so you can eventually like pass it on to them. And there's ways to structure deals where it's not that they have to put in like hundreds and hundreds of thousands of dollars right up front. they can actually pay you with the profits of the business over time. And that's a good way to kind of manage that. Because I know, like in my world, with like the service-based business, it always has to be either that or like you just get lucky because like some large group is trying to extend their like framework and they just wanted an open and shut like service business to jump into. But most of the time it is that sort of mentor mentee passing
Or
down
taking on a
the
partner,
business.
you know,
Yeah. Or that, I mean, obviously, that comes
with
with
the
all
with
those
the
sorts of things, but yeah,
you know,
like,
creating a partnership with the eventuality being that you will retire and the partner will take over.
yeah,
You know,
exactly.
there's a lot of ways to do it. I'm just saying to be very cautious that your particular business may not necessarily be something that can be sold later,
Yeah,
but a lot of them
absolutely.
can.
And it is something you have to like think about years in advance. So it's not even something that like, you know, you have to work on today, but it's just something to think about.
Yeah. I want to spend just a couple of minutes talking about journalism for a minute because uh, I recently saw um, a news clip, a news piece that said that people in their 20s today get their news from either TikTok or influencers.
Yeah.
And influencers are not journalists. Like, I am
No.
not a journalist. I spend my days interviewing people, but I am not a journalist. I'm not trained. I don't do third party vetting. I don't do any of that. I just go with my gut, right? I am
Right.
not a journalist. You should not be coming to Kandas for news. Come to Kandas for interesting conversations between interesting people, right?
Yeah.
Um,
Yeah.
how do we save journalism?
Well, that's a big question. I will say, to like in my own world, even like money influencers get like so much attention. Like, hey, here's how I, bought a yacht and paid zero taxes. Where basically the person's admitting to tax fraud on TikTok and suggesting that other people do it. And so part of what like my goal online is just to like share stuff that like is actually legitimate and like be a voice of reason. And I think a lot of journalists take that approach with it. They can't control the influencers and they can't control what people are going to listen to, but they can only do what they do, which is focus on like what's fact, what's fiction, what can be proved, what can't be proved, what are sources saying, what are sources not saying. Back to that education going full circle, like we need schools to be teaching how to actually understand the difference between what is opinion and what is an unproven opinion and what's an unproven or what's a proven fact. And so there needs to be better like, you know, reading comprehension and fact comprehension, frankly, within that.
Critical
And then,
thinking.
yeah, exactly. And then also like support your financial or your journalistic institutions. Like they need money. I think eventually there needs to be more nonprofit journalism organizations because of the way the financials work. But like I support the New York Times, I support Newsday, which is my like local newspaper, and I don't necessarily read it on an everyday basis, but I want to keep those things around. And so that's what I do, my little part. One person can't do everything, but they can at least like support in that way.
I saw recently that 90% of news outlets are owned by 6 different corporations.
I mean, that's the reality of it. Like,
So I'm totally on board with nonprofit news.
yeah, I just think eventually, I mean, other than like having billionaires sort of uh, take losses on these entities just so they can, you know, spread their word or have some influence or something like that. That's not necessarily the best way for, democracy
Yeah.
as a whole. So,
Yeah.
that's
No,
part of the reason.
no. Okay. Thanks for spending a little time talking about that because it is something
Absolutely.
that is important for us to understand that is going on in this world. Okay. So,
Absolutely.
what surprised you most about moving from journalist to financial advisor?
My biggest surprise actually is as I've built clients in my space that I'm really focusing on, I'm actually able to connect them with other therapists in their area or other self-employed folks within so like they're thinking about like how can I grow? I'm like, oh well, I have this client over here who's already done that. Why don't you talk to this person? And as long as that person's willing, then I connect them to. That's honestly the coolest thing. Never expected that I'd be doing that. But like I have dreams of basically building just, essentially a site where people can go if they want to start private practice. They can get all the stuff that they want or need, but also connect with all these different folks who've already been there, done that, and seen it. So there can be a lot more sharing of expertise there because it's honestly been one of the coolest things from that.
That's my favorite thing about being a business owner is all the
Yeah,
other business owners I get to meet and how groovy they all are. And how,
absolutely.
and when you meet somebody and you're like, oh my God, I like when you just said that, I'm like, okay, I need to introduce him to Kimberly. So when we're done, I'm going to introduce you to a wonderful woman named Kimberly that I think the two of you would make great referral partners.
Hey,
You know,
that sounds great. Yeah,
um,
always looking for new connections like that.
so I mean, you just never know when someone is if you're paying attention when somebody says something, it might click. All right,
Yeah.
what for your business? What is your favorite marketing tool, tip, or technique?
Goal to protect. Well, I love podcasts. That's why I'm talking to you today because I honestly I love the conversation. I am curious. I'm still trying to find like my favorite. I'm starting to build a course, like a free course, because there's a lot of personal finance stuff where like you need like an expert on your side, but there's also a lot that can be taught before you actually speak to an expert. And so I actually want to create a course that really goes deep into that stuff. And I'm going to be really curious about that because I would love to see that get some attention eventually, some viewers. And if enough viewers come around, then I'm happy to make more. And so I'm hopeful for that one. But for right now, I'll have to say podcast.
All right, Ryan Derousseau, this is your moment of gratitude. For whom or what are you most grateful?
At the moment, I'm most grateful. I have two kids. I love them both equally. It's just at the moment, I have a 2-year-old who's really coming into her own and really finding her voice. And she is as stubborn as can be, but it's really hilarious a lot of times. So I'm right now at the moment just most grateful for her like budding personality.
Thanks for tuning in to Gratitude Geek, the relationship marketing podcast for micropreneurs building genuine, lasting relationships with clients, colleagues, and community. Our theme music is track 14 by Rev Brock and Soul Lily. To connect with our guest, Ryan Derousseau, head over to the show notes at gratitudegeek.com. This is episode 224. I've been your host, Kandas Rodarte. Stay groovy, my friends.
Stay groovy, my friends.